very much for making a date. Welcome back to the marketplace. Now, to begin it all, government says it will take up 50% of all loan facilities advanced to companies under the One District, One Factory program. Senior Minister Yaw Osafo-Maafo, who disclosed this at the Graphic Business and Stanbic breakfast meeting in Accra, added that so far funds have been released to 15 companies which are at various stages of construction. He was speaking on the theme, unlocking economic growth through manufacturing cost, quality and competitiveness.
Manufacturing in isolation. Infrastructure includes power. What happened to us a few years ago? Could any industry survive under the quality of power that was being turned out by the country? The DUMSO literally undermined the competitiveness of manufacturing in this country. And therefore, a government must pay attention to an important infrastructure like power. Must not only be available, but available continuously and at a available price. So you see the need for the policy to support manufacturing. And at our first cabinet, we decided that we should put an end to DUMSO, whatever it costs, to make sure that there's continuous power. We should do it. And it has happened. Then followed the third thematic area of the president's areas of concern. The next one is about the manufacturing, what he called accelerated industrial development. So that the industrial development must fit within a system. And the last but not the least of the four is also agricultural transformation. As Dr. Otinjesi rightly pointed out, manufacturing must satisfy certain things. People must look for certain things to go into manufacturing. One is market. And therefore, import substitution was the vogue in the 50s and 60s. We are importing so much of this, and therefore, let's produce for the market. We also know that the basic principle of economics, which was true yesterday, true today, and will be true tomorrow, is you identify your own advantages in relation to the others, so that you develop your advantages to your advantage. Therefore, your raw material becomes important. How many drinkers of cocoa can grow cocoa in the world? So where our cocoa is consumed, they can't grow it there. So Ghana has that advantage. And therefore, agricultural transformation is key because it's also...
Osafo-Maafo also disclosed that Cabinet has approved about 236 million cedis to support potential but stressing companies under its stimulus package program. Now, on his part, former AGI President Dr. Otinjesi has also been talking about proper planning processes between government and the private sector.
I'm looking at processing. Just look, even at processing, what goods can I process? So I can grow oranges, I can grow mangoes, I can grow pineapples, so I can grow plantain, I can make plantain chips, it's a big product now. And let's start with that and make sure that the differences between the countries we import from, whether it's South Africa or it's wherever, and our country represents this amount in tariff. Let me put that amount there. Make sure that it is paid and then grow that industry. As you grow more of it, as you set up bigger farms, your cost of production comes down, your availability of raw material improves. You integrate the industry backwards, because that is all part of the dynamism of industrialization. So you integrate it backwards and you make sure that you are going into mass production of the raw material. We have an AGI manufacturer in Kumasi who processes soya bean and things, and he can't get the soya bean, and he's bringing it from Brazil, or even Blue Skies. Blue Skies is importing fruit. Where is the national strategy to promote fruit processing and making sure that enough fruit is being grown? So whatever it is you need to grow fruit, who is identifying the fruit farmers? Who is finding out whether it makes sense at all for them to sell their fruit to a processor? Do they make a margin? If they don't make a margin, why don't they make a margin? What can I do to help them make a margin? Is it the cost of fertilizer? Is it the availability of land? Is it lack of irrigation? Those are the things a national strategy forces you to do. I mean, countries have worked on whole products. When Japan decided that it was going to take over the watch industry in the world, we all know the big names for watches around the world, the Swiss companies. All of a sudden, Casio and all those Japanese companies went into watchmaking because they recognized a certain technological advantage they could have and put money into the research and change from analog watches to digital watches and left the Rolexes to high-class watches. They changed the world industry. It's a country strategy. Where is our country strategy? We just talk and appeal and moan and agonize. But where is our country strategy? We have an industrialization plan. I've seen various ministers of trade inaugurate an industrialization plan. And we have fanfare and we come and we inaugurate it. And after that, what happens? Where is the work program for it? Who is following up on it? Who is reviewing it?
All right, so those are excerpts of the graphic business Stanbic Bank breakfast meeting, which took place this morning at the La Beach Hotel here in Accra. Let's turn our attention now to some stock market news. And the initial public offering of MTN Ghana is finally expected to end by the close of today. The offer, which began on May 29, has been described as historic, as the telecoms giant targets 3.4 billion Ghana cedis. The MTN IPO is a requirement from the Communication Ministry for the company to access a 4G license. Meanwhile, news reaching us indicates that institutional purchases of the IPO fell short. There's more in this Business Desk report.
MTN is seeking to raise 3.47 billion cedis during initial public offering. For the offer to be deemed as successful, it should be able to mobilize at least 347 million cedis. The telecoms giant is planning to sell 4.6 billion shares, with each one going for 75 pesos. The offer made the headlines for the good and bad reasons. First, it was about the fact that it was giving Ghanaians an opportunity to own part of a successful multinational. And then the bad news, which is reports that the offer brought some pressure on the Ghana cedi, resulting in a sustained depreciation against the dollar. But MTN has denied this, saying it reached an agreement with the Bank of Ghana to stagger the dollar dividend payments to its shareholders. The wire reports that the offer faced some challenges in terms of buy-in from institutional investors, but sources say things have improved now and that would result in a successful offer. If everything goes as planned, MTN should be on the Ghana Stock Exchange by September 5 this year.
This is live on the marketplace. Let's still stay a little longer on this development, and we're touching base with Head of Research at Databank, Alex Boahen, for some more analysis on the MTN's IPO, which is expected to close today. Good afternoon, sir. Welcome to the marketplace.
Thank you.
All right. So beyond the offer which closes today, what next for MTN shares on the stock market?
Well, I mean, the offer is today, but it doesn't mean that after today, if you want to buy the shares, you can't. I mean, the difference is that you are buying it with the IPO, you are buying it at 75 pesos per share. After today, when the stock is listed, you can't be guaranteed of 75 pesos. But once it is listed on the secondary market, the price are susceptible to changes, and so that is the risk that will come with it. So those who, for one or two reasons, could not buy the shares during the IPO will still have the opportunity to buy it on the secondary market.
All right, so which means that potential investors will now buy these shares at a relatively higher cost.
Not necessarily higher cost. You know, when the shares are listed on the stock market, it can go up or it can or down. So the price cannot be guaranteed at 75 pesos. So it may be possible that it may go up to more than 75 pesos, or it may even come down. So that is the risk. But I mean, obviously, if you want to buy on the secondary market, it is possible after the IPO.
All right, so what will happen if, for instance, somebody goes to buy some shares at the IPO but wants to change hands or sell off these shares at the next stage? How does it work out?
Yeah, I mean, it's possible. I mean, once you have the shares, for instance, currently at 75 pesos, if for some reason, once it's listed on the stock market and the price goes up to say 1 cedi, what it means is that investors will be making 25 pesos profit per share. So if you decide then to sell your shares, what you do is you contact your broker, you fill a form, a very simple form, and the broker would actually execute the trade, would sell the shares for you on the market.
Now, what if it fails, or what if MTN Ghana is target or fails to meet its target at the IPO? What happens?
Well, fails, I think, well, certainly, I mean, from the numbers that we are seeing, the IPO is going to be successful. But if it fails, technically, if it fails, they can't go on the market and list. Yeah, what it means that at some point, the company will have to even return the money to the investors. But from what we are seeing here, I think the duration of the IPO was quite long. I mean, we're talking about something around 2 months. And for that reason, we saw a lot of investors, I mean, retail investors, I mean, participating in the IPO, because obviously professional investors will not like to lock down their money for 2 months, which they can actually earn interest on. So this morning or this week, we are seeing some participation from professional investors, fund managers. I mean, talking about the institutional investors, but largely, I mean, that view has been dominated by retail investors. And I must also add this: this IPO, once it is listed, will have a far-reaching implications on the market. I mean, because if you look at the number of people who are actually participating in the offer, it can potentially encourage people to believe in investment. I mean, if the stock performs very well on the stock exchange.
All right, now before you go, we are getting indications that institutional purchases for this IPO has not been too encouraging. You may not be privy to this information, but if it's happened this way, what would it mean, or what does it tell the markets?
Yes, I mean, if it happens this way, the risk is that MTN might not be able to raise the money that they want to raise, because our market is dominated by institutional investors. Our market is mostly foreign-driven. I mean, if you look at the numbers from the Ghana Stock Exchange, our market is more than 50%. Sometimes close to 60% come from foreigners. Okay. You understand? So, and foreigners, most of them, these people are institutional investors. So the market cannot do without institutional investors, and for if that is to be. I mean, if that is the case, then the offer runs the risk of not being successful.
All right, that brings me to my next question. We've heard that the Ghana Stock Exchange, the MD for the Bears, has disclosed that the Bears will very soon embark on an advocacy to compel licensed companies which want to operate in Ghana to float part of its shares on the capital market. Now, this is a kind of compulsion or compulsory attitude. Is it an international practice?
Yeah, but it is something that it's interesting because, I mean, there have been a lot of conversation around this issue.
Okay.
Actually, you can't force a company to raise money if they don't find a need for it. I mean, if we're asking a company to come on the market through an IPO, you are literally asking them to raise money. So if a company does not need money, you can't actually coerce them to actually do that. But the interesting thing is that we have companies that are also putting that have very profitable businesses in Ghana that are owned exclusively by foreigners. And it tends to put a lot of pressure on our currency. So from that perspective, I understand where the regulators are coming from. But I think that generally it's good to look at it. I mean, after all, it's our country. And certain countries have been successful in implementing this strategy where once you are coming into the country, they lay out the conditions. You understand? For instance, these mining companies, these exploratory companies, mining companies, and other companies that have been in Ghana for so long and are very profitable. I think it's a good thing to do because that is the best way, or that is one of the ways we can actually use we can employ to ensure that we grow our capital market.
All right. Thank you so much, Mr. Boahen, for your time. That was Alex Boahen. He's the head of research of Data Bank. He was sharing his thoughts on the IPO of MTN Ghana, which closes by the close of today. Away from that, and let's turn attention now to the banking sector. It has emerged that the Bank of Ghana spent over 8 billion cedis in supporting troubled banks and other institutions last year alone. This was captured in the Bank of Ghana's financial statement covering its operations for the 2017 financial year. But looking at the challenges facing some banks, would the central bank be able to recover these loans? The following report has more on this and other issues captured in the financial statement.
The report showed that the 5.2 billion cedis was advanced to banks that were facing some liquidity challenges, whilst 3.3 billion cedis was also given to other government institutions. Already, the Bank of Ghana in the statement is projecting that a fraction of these loans would not be paid back on time, raising questions about these supports and whether the regulator might have to review these loans that are lended to the banks. However, a careful look at the numbers also showed that the stock of loans went down marginally from 5.7 billion in 2016 to 5.2 billion cedis in 2017. It is also clear that the regulator made a lot of advances in 2016 as the financial support went up from 1.8 billion cedis to 5.7 billion cedis in 2016. The 2017 financial report also showed that a part of its total assets of 58.8 billion cedis is locked up in bad debts. The Bank of Ghana also spent about 64.2 billion cedis this year on settling legal suits. These were mainly due to the cases brought against the Bank of Ghana in relation to contracts, supervisory role, as well as disqualified employees and alleged wrongful dismissal. The staff strength of the Bank of Ghana stood at over 2,000 ending December 2017, while the amount of coins and notes in circulation as at the end of the year stood at 12.1 billion cedis. Interestingly, as a result of some challenges in recovering loans granted to the financial institution, the Bank of Ghana recorded a loss of 1.6 billion cedis.
So staying in the banking sector, then unaudited half-year financial statements of banks in the country have started trickling in. This covers developments for the first half of the year for the period under 30th June 2018. The statements tell us the performance of various banks with regards to their profit loans and advances, deposits and non-performing loans. Philip Namfuri has been going through these statements and joins me in the studio for some highlights and discussions on the performance of some of these banks. Now, Philip, what are these banks, posting?
Okay, so let me just start off here. The Bank of Ghana has a directive where it tells all banks that at the end of March, at the end of June, at the end of September, the 3 quarters, you are supposed to publish your financial statements. If you look at the Banking Act, that's the Banks and Specialized Deposit Taking Institutions Act 2016, it says at the end of every year, Section 80 says all banks are supposed to publish their audited financial statements for the year. So, in compliance of this directive, the banks are rolling out bit by bit. It's not all of them that are brought out. If you check the dailies yesterday and today, a number of them have brought.
All right. So which banks are you looking at today, and what are
so I took 4 banks, and I must say that when you are looking at such analysis, you need a large number. But because the results are still coming in, I've just picked a few so that we can examine them. So I'm going to look at EcoBank, Stanbic Bank, Fidelity, and GCB Bank. Now, if you look at EcoBank, for example, it's captured its results nicely. And its profit before tax had gone up 11.29%. Its total assets had gone up 18.67%. Its loans and advances had gone up 15.57%. And its deposits had gone up 20.79%. So if you look at the key indicators, and even going back to the banking sector report that was released in July for the month of May, covering developments up to April, you would realize that it's not at variance with the banking sector reports. If you look at the Bank of Ghana's report, it says established or captured certain key things that these banks are showing. So, for example, EcoBank like this, good numbers. If you look at Stanbic, for example, the same good numbers. It's net interest income. And by net interest income, I mean what a bank is going to spend on a loan and what it's going to receive. The difference between that is what's called net interest income. And banks make money from 2 main ways. Interest income, that's what I just explained, and fees and commission. So when you use your credit card, you use your debit card, you go to the bank, yes.
So let's take a look at EcoBank's performance before we come to the other banks.
Okay, so like I said, EcoBank's profit before tax has gone up, total assets has gone up, loans has gone up, and deposits has gone up. All of these are good indicators of a bank. And I said, if you check the banking sector reports, overall, all the 34 banks operating in the country, Bank of Ghana said the industry is solvent and solid. That was at the end of April. But we just added May and June, 2 months. And these are numbers for the end of June.
For EcoBank?
Yes, for EcoBank. So
what about its non-performing loans? Was it?
Yes, so the non-performing loans ratio dropped marginally. And I remember from their AGM, they made mention of some of their legacy bad loans they had and how they're taking steps to correct it, which reflected in their 2017 statements. So coming forward, they have cleaned that sort of smack. Yes, so going forward.
Let's take a look at Stanbic now.
Okay, so with Stanbic, what I gathered from the financial statements, net interest income has gone up, net fees and commission, like I was explaining, fees and commission from credit cards, from debit cards, has also gone up, the money they make from it. So overall, if you balance the revenue versus their expenditure, you realize that their profit has gone up to about 100 million Ghana cedis plus. And these are developments for half of the year, 2018, the first half. If you look at the non-performing loan ratio also, it has also gone down. Now, I want to move on to another bank, Fidelity Bank. And when I look at it, its deposits has also gone up to about 4 billion. And deposits are the lifeblood of a bank. If you check the banking sector report again from the Bank of Ghana, sources of funds for banks is still heavily reliant on deposits. And if you look at GCB Bank, earlier on last month, we were at their annual general meeting, and the effect of the UT Bank, Capital Bank purchase and assumption agreement had a little effect on it. So you can see a little trace of that in this half-year report. Some of their numbers have gone down, but it's not something too worrisome or too shaky. I mean, they're a strong and resilient bank, and then a local bank at that. So
so go through. So is that the last bank? GCB?
Yes, that's the last one. So these are 4 banks: EcoBank, Stanbic, Fidelity, GCB Bank. These are the 4.
So out of these 4 banks, I mean, looking at the trajectory, which bank would you rate as the most
I wouldn't want to
performing bank?
I wouldn't want to pick or cherry pick one of them and say they're performing. Like I said initially, the regulator of them, as at April says, generally they're all doing well as an industry. But all these are unaudited. So if an auditor goes through and then something has to be changed, then these numbers have to change. But from what they've put out, they've complied with the directive from the Bank of Ghana. And from the numbers I've just read for you, from even these 4 banks, they are good. We should expect more of these banks to bring out their data in coming days, because they're supposed to comply with this directive, and it's as simple as that.
What does it also indicate for the banking industry? Okay,
so for us customers, let me start with customers. For us customers, it's good to get a view of where you save your funds. If you don't really understand, get a financial advisor, get someone who can explain how your bank is moving. For the banking community, yes, there's always this thing we call systemic risk. If something affects one bank, it affects the other. So if one bank is doing well, there's a positive effect for all of them. Because if something goes bad in one bank, it will run through the rest. So from what I've seen so far in the financial statements, I think it's good. So
what banks maybe are you bringing to us tomorrow?
Okay, so tomorrow I think we can look at Societe Generale, we can look at Zenith Bank, we can look at UMB, and we look at Access Bank. Yeah.
All right, thank you very much. Philip Namfuri is an in-house analyst, and he's been looking at the unaudited half-year financial statement of some commercial banks in the country, which have started trickling in. And on that, we'll wrap up this afternoon's edition of The Marketplace. It's been great having you on board as usual. My name is Emmanuel Abuaji. We are Have a good afternoon.